Good morning, everyone. As you know, I like to give our people time. I like to give our people time to log in. So we will definitely give our Floridians, our South Floridians, some time to log in. In the meantime, as usual, I'd love to greet you all in the chat. So let's. Um, I'm about to say good morning in the chat, and I'd love to hear about your thoughts regarding yesterday. Were there any panels that really hit the nail, that really helped you and answer some questions for you? I'd love some feedback on, which panels you benefited from the most. And so as we wait for our community members to log in, I'd love to say good morning and we'd love to hear from you.
Oh.
Yes, Lisa, I also will be replaying. I will be playing a few of the sessions for sure. I learned a lot.
Betsy said it was fabulous,
Yes.
Dr. Anna.
Yes. Yes, I agree. I agree. The Nico, Annette, Leanne, Major, and Abdul, they were phenomenal. The e-commerce panel was really great. Yes, I agree. I agree. I had my notebook. I told you guys yesterday morning I had my notebook. I was ready. It was phenomenal. And so I'm so glad you guys are here for day 2. I'm glad you're here for day 2 too, so we can continue the conversation. Today should be a lot of fun.
Well, I don't know. I feel pressure now.
No.
I'm feeling a little pressure.
Okay, that's not even possible. Once I get done introducing, not even possible. Not even possible. Yeah, no, it was great, and we decided to save the best for last.
Oh,
Best
I
for
see.
last. All right. Yes, absolutely. The e-commerce panel was awesome. The Wix workshop was phenomenal, and they gave away free membership premium to everyone who attended. And so those that
Wow.
event, are received codes for a year free with Wix. So that was pretty awesome.
That is awesome.
Mm-hmm. Okay. Someone said that they're glad that we're on Miami time. I know to not start at 10 on the dot. To give you some time to get your coffee. I'm so grateful to everyone for hanging out with us. We do our best to put some breaks in between so you can have your lunch break. I'm really trying to give you the summit experience, even though we can't actually be together. But I'm hoping we were able to give you that kind of energy, even with the coffee house music in the background. We did our best to make it as comfortable as possible so you guys could come back, have some time, and learn. And so as I'm learning from the experts, I love hearing from you guys about what you benefited from. So next year, we can be more informed and continue to get you the support that you're asking for. We definitely don't want to guess. We want to know what the needs are. And so that has been the best part of this session. Oh, Betsy says that there are a few people on TikTok who totally understand Floridians' pain. I'm in full agreement with that statement. I'm new to TikTok, so I can't say I know what I'm doing, but it's a lot of fun. Okay. All right. Well, I'm going to get started. I feel like I've given our people 12, 13 minutes. I think that's fair, right? Right, Sabrina? I hope that's fair. We're going to get started. So just wanted to thank everyone for joining us today. Happy Friday. Happy
All right.
Friday. In this version of Friday, you know, everyone being safe and quarantining, staying home, and being positive. As I stated yesterday, the goal of this summit is to be optimistic, is to look for opportunities and resources that we can benefit from in the new year. We really did see, you know, as an organization, we saw certain businesses really leverage the transition to online behaviors, and in an effort to support everyone, right? Because you know we're one community. We want the dollars to circulate within our community. We want to our own people to benefit. All of us here in South Florida, from Palm Beach down. And so the best way, you know, I thought we could, you know, implement resources for that is to support as many people as possible, make the transition to prepare themselves for evolving their platform, evolving their portfolio of how many revenue streams are coming in. So despite the fact that, you know, the farmer's market option is no longer what it used to be, you know, your local grocery store or restaurants are no longer in a position to, you know, work with you in a similar way. What are other options available? What are other resources available that can help you expand on that? And so it's impossible to have this conversation without talking about the dollars, right? We've experienced such a hard impact in this space. So many of the businesses we work with personally experienced like a 80 to 50% drop in revenue. And it was so quick, right? And so, you know, now that we know what we're dealing with, now that we're more informed, we're in a better position to make a pivot. And that requires a conversation about the finances of your business. And so I thought the perfect person to lead this conversation would be the one person I know in South Florida that has been the most active in the small business space, and that is Althea Harris from SBA. Now, if you do not know Althea Harris, you should not leave this session without getting to know Althea. Althea has been an advocate, not just as a director within her organization, but an advocate for small businesses within South Florida. I mentioned to her, you know, in a past life, I worked for another organization. And I mentioned to her, I was like, man, Althea, I don't think you know how many people, how many small businesses you've impacted. Like, I find your name on Twitter. I find your name in these spaces where people are writing about you. She had no idea. And so I figured she would be the perfect person to talk to you and to lead this conversation about all the stages, right? From that startup small business to, you know, the micro business that's in a shared commercial kitchen space, to the business that is finally within their retail space and they're, you know, trying to make things work. They're trying to become sustainable. She has been able to cross over in all of these areas. And so without further ado, I'm so happy to introduce you all to Althea Harris, an advocate within our community and an SBA representative. Thank you so much.
Thank you, Dr. Anna. So nice to be with you all. Delighted that you could join us. We have an interesting discussion lined up for you today with lending sources, but not only do they know about small business financing, they know a lot about a lot of things. And we're going to endeavor to share those nuggets of wisdom with you today. I really appreciate your kind words, Dr. Anna. I have enjoyed my 21-year career with the U.S. Small Business Administration. I've been in federal service for 27 years. I started in my hometown of Washington, D.C., working at the Commerce Department for the late Ronald H. Brown, Secretary of Commerce. And then I moved over to the General Services Administration, where I learned how government does its business in terms of contracting and procurement. And then I In that time, I got married to the one and only Robert Harris and moved here to South Florida, where I have had the distinct pleasure of working with small businesses. And my husband himself has his own law practice. And so it has been a very interesting 22 years as I've not only helped other people grow their businesses, but my husband grow his own. So I really do know firsthand the joys, the pains, the struggles of growing a business here in South Florida. And it really informs the way I do what I do. We have 4 wonderful children. The oldest is in her second year in college at Howard University, which is my alma mater, my husband's alma mater, where in fact we met. And then we have 2 high schoolers and 1 son in elementary. So it's been an interesting 22 years here in South Florida. With that, I will ask, because I believe in ladies go first. Ariel, Lauren, will you introduce yourself, please, to our audience and tell them what you're working on these days?
Yes, absolutely. First of all, good morning, everyone. Super excited to be here. And so I'm the founder of 100K Incubator, which is the first business funding mobile application created for women. For the past 2 years, I've been running a women entrepreneur focused incubator that helps women-owned small businesses scale their businesses and get funding. And so through our track record and what we've been able to acquire in terms of capital for these women entrepreneurs, in addition to helping them scale to $100,000 in minimum sales annually, which is why we're called 100K Incubator, I was actually approached to start a fund. And so we're super excited to finally be accepting applications from women-owned startups next year. And we've committed 75% of our fund dollars to go towards Black women and supporting them, especially in the Miami area. So we're super excited about that and super excited to be here.
Wow, awesome. Can't wait to hear more about that. Danielle St. Luce from BBIF. Tell us about BBIF and what you do there.
Hi, everyone. Good morning. So BBIF stands for Black Business Investment Fund. We are both a Black Business Investment Corporation created by the state of Florida and a CDFI or Community Development Financial Institution. So we focus on providing loan dollars at low interest rates to small business owners, as well as technical assistance, or you may know it as business advisory services. We actually also do SBA loans. So we work very closely with the SBA, both in DC and down here, to provide those loans still at a low interest for small businesses.
Awesome. And we're going to get into how you do what you do. And I'm glad you could be with us, Danielle. Jeffrey Sotolongo, you are a traditional lender. Tell us all about what you're doing at B of A and how you came to be there.
Well, first of all, thank you for having me here today. And for me, it's like coming home. So I'm an FIU alum, so I need to say that first of all. This is great to see people here attending the summit. Been with Bank of America for 14 years. Small business for 10 of the 14. I'm currently the small business banker manager for Miami and Broward counties. Love small business in Bank of America. Yes, we are a traditional lender, but we're also giving back. So not sure if you heard, but our CEO, Brian Moynihan, pledged $1 billion to give in the next 4 years to local communities to help in different segments of the economy, including small business, right? And the majority of that money is going to go to minority small business owners, Black, Hispanic, to make sure that we give them the training needed, the support they need. So looking forward to the conversation and looking forward to the questions that we have and also the engagement of the panel. So thank you for having me today.
Awesome. Thank you for joining us. And $1 billion is not chump change. So that's wonderful.
No.
That's a great announcement. And not to be lasted, we have Dr. Joe Webb, who is, oh man, just chock full of wisdom. So Dr. Joe, would you introduce yourself?
Yes, good morning, and thank you all for having me. Dr. Anna, she'll know what I mean by that. Dr. Anna, good stuff there. Uh, I am Joe Webb, and the name of my company is Profit Planners Management Group, where I serve as a registered investment advisor, working with individuals and families. I'd like to put out there a 30-year Air Force Reserve veteran, retiree. Have enjoyed service in the country in that area. I have a nonprofit, which is where my doctorate lies, and that's Twin Peaks Financial Ministries, where we focus on educating, elevating, and empowering in the areas of finance. The last 5 to 7 years, I've been very actively involved. Thank you, very actively involved in local chamber here in Miami, South Dade Chamber of Commerce, where I served as the treasurer and just outgoing chair. And I had an extreme focus in looking at with the small business, just some of the challenges. And of course, me being a small business owner myself, when it comes to providing benefits, affordable benefits, and putting together what I like to call the starter kit. And we'll talk a little bit more about that. Thank you again for having me.
Thank you, Dr. Joe, for your service to the country. Really, really appreciate you. So we've come to talk about growth, right? So let's talk about growth. The typical way that I have found over my 27-year career helping small businesses is they typically think about growth and the way to achieve growth through a lending process, right? To obtain capital or financing, to leverage someone else's money in order to grow their businesses. But I have also discovered in my 27-year career that this is not necessarily a means to growth. It can be if you're prepared for it. And what I have found in my time at SBA, since we are a supporter of access to capital for small businesses through our loan guarantee program. That is, let's say you go to Jeffrey to get a loan for your business. Jeffrey might come to SBA and say, hey, I'd like you to guarantee this loan and we'll make it to this small business owner. That's our relationship with you, the business owner, and the bank. And in truth, we really don't have a relationship with the borrower. We have a relationship with the bank. And it's really important that even as we talk about being ready for financing, you really have an appreciation for who it is you're talking to when you talk about obtaining financing. So just knowing your audience is part of the preparation process. And so I want to talk first about what it means to be prepared to borrow or prepared to receive financing, whether it's from a traditional bank like at Bank of America, an alternative lender at BBIF, or even venture capital with Ariel's group. So Jeff, since banks are the most popular and plentiful source of funding that most people are accustomed to and aware of, what are some of the considerations that you think about when someone comes to you for financing? What is, and where the unprepared borrower finds no success? What preparation is required for them to be successful with a traditional lender with or without SBA guarantees?
Yeah, that is a really good question. And, first of all, you have to know what is it that you're trying to achieve, right? So, many times, you speak to someone and they say, oh, I need a line of credit, and you ask a question, well, why the line of credit? Well, I want to buy a piece of equipment that's going to help me grow in 3 to 5 years. Well, you know what? That is not a line of credit. That is not a line of credit. That is probably a term loan, right? So one is, know what you're looking to do, how you're looking to get there, what are you looking to achieve. Number two, seek help. Don't be afraid to ask for help. And most banks have a small business banker or a small business specialist or a small business consultant, Bank of America, Chase, Wells Fargo. Go to your local bank, go online, book an appointment, speak to someone that knows who you are and what is it that you're looking to accomplish. Every bank is different, though. Even though most banks are the same in the sense of what are we looking to do. Banks are what we call cash flow lenders, and I'll go into a little more details of what that means. But book an appointment, have a sit down conversation with a local professional that knows you, knows who you are. And they can tell you what, this is what, you are looking to accomplish. And even though you might think you need a line of credit, well, you know what, based on your financial picture or business life cycle where you currently are, you might be in an expansion mode, 2 years in business. We probably need to reach out to Athea and the SBA and try to get an SBA guarantee, right, to help you throughout the loan process. Well, that is a different process. That, and Athea knows, requires more documentation, an SBA application, more and more financial, personal and business. And then that will get you ready, right? When you formally have everything collected, and then you're ready to speak to someone that can then sit down with you, review your financial pictures, and that's going to be probably minimum 2 years of personal and business returns, a personal financial statement that's going to list all your personal assets and liquidity and expenses and all that jazz that you have, and make sure that you take your time. People try to rush through the process, and I need the money today, right? So we all know that yesterday, not today, yesterday, right? It's like, here, tell me what you need. Okay, here it is. No, I mean, take your time, sit down with a professional, review your financial picture, right? And then when you have that ready, then you're able to go back to the bank and then submit your application, being directly with the bank, or like Athea said, with the help of the SBA, to get an SBA guarantee to help you obtain the additional monies that you need to continue to grow, right? And remember, it's all about where you are. So, if you might not be ready for a traditional bank to help you currently, right? You might go to someone like Ariel, Danielle. That might be the first step that you are where you need to be now. And later on, as you continue to grow and your business continues to expand and your financial picture changes, then you can probably go back to a traditional bank and get traditional bank lending. And remember, banks are here to help people that are able to show sustainability and profitability, right? So like I said earlier, banks are cash flow lenders. What does that mean? Well, risk reward, right? So what is the risk of a bank, or the reward of a bank lending you fund? Well, the reward is that the banks, collect interest, and we are able to improve our balance sheet and help you, right, expand your business and continue to grow. As many of us know that our small business is our babies, right? I think after your family, the next in line is just your small business, right? So it's really dear to many of us. But also, banks are not in the business to foreclose or repossess or go after your receivables or have to collect. That's not who we are. That's not our business. Our business to make sure that if we take on a loan and we go to someone like Althea and the SBA, and they give us an SBA guarantee to help you in that growth trajectory that you're in, that we do it the right way, right? So what I would say is that A, don't be afraid to ask questions. B, make sure that you use the resources that you have at your local bank. Many banks have a small business specialist that you can sit down with and have a candid discussion of what you're trying to do and where you want to get to, and ask them, what are your requirements? What is Bank of America, Wells Fargo, Chase, or Citibank looking for me to be able to obtain this loan? And then if you're not ready, then become ready. Speak to a financial advisor that can help you get there, right? And lastly, be resilient. Continue to look ahead. One thing that 2020 has taught us, is we're able to do anything when we put our minds to it, right? And continue to touch base with your local bank. Continue to to if you're not ready now, work towards that goal of becoming lendable to a bank. And if you are, that's great. Make sure that you go to your bank, get the resources that are out there, and make sure that as you continue to grow, have a partner. So don't look. And the last thing I will say, and I'll turn it back to you, Thea. Make sure that when you do choose a bank, don't choose a bank just because they're in a corner. They have a free checking account. Someone knock on my door or send me an offer, and offer me $100. We've all been there. I'll give you $100 if you open a checking account with this bank. Look for a partner. Someone that you trust, someone that you feel that you can grow with in the next 3 to 5 years, right? Just like you will interview potential employees to work for your company, interview banks. Take your time. This is an important decision. Go to different banks, and when you sit with someone, and hopefully it's Bank of America, but if not, that's okay. I'm not gonna hold it against you. But go to local banks and interview each person. And when you feel comfortable, when you can say, you know what, this, Ariel spent the time with me today, half an hour, 45 minutes to learn about me, learn about my business, even though, I might not qualify for what I think I might, she took the time to really understand me, and I feel this is someone that I want to grow with, right? So make sure you make that decision. It's an important one. And sometimes, we overlook it, but having someone that you trust, having a team of professionals, right, like Dr. Anna, that you can reach out to and you can ask questions. A bank is the same way.
Awesome. You've said a lot, Jeffrey, and I just want to repeat some of the things, the key points that you made, because I don't want folks to miss this. You basically said, look, you be educated as part of the preparation process. Literally know the terms, right? Meaning have a vocabulary, a financial vocabulary, because you might walk in and ask for a line of credit, and the moment you answer the question, I want a line of credit to buy equipment, the person you're talking to instantly knows you don't know what you're talking about. And you do know what you're talking about as it relates to, doing hair. Well, it's not a hair group. Your recipes and food delivery. You do know those things, but you don't really understand financing. And that's going to be a tip off to them that you're not probably quite ready to borrow. Jeffrey, you also talked about being very clear about what you want to accomplish. And we're going to talk more about that. What is the purpose of this loan? And generally speaking, how does it fit in with your overall vision for where you're attempting to go? The other thing I heard you say was, don't be in a hurry, okay? Because getting financing is not apply today, money tomorrow, despite what many advertisements might say. If you get in league with an organization that can turn around money that fast, you should be concerned. Generally speaking, there's probably some fine print that you're missing. So, the preparation process may be lengthy, but the longer you take in preparing, the shorter the battle should be, okay? So don't be in a hurry to get financing. Slow down, understand terms, know what you're trying to accomplish, put your infrastructure in place. That's going to help you be a little bit, it's going to help you be more successful. And the final thing I heard you say is really understand that there are different players in the marketplace, and you need to be keenly aware of who it is you're talking to. So you just heard from a financial institution, a large one, Bank of America, and they are looking for certain things. He said they're a cash flow lender. Well, most lenders are cash flow lenders, but there are some lenders in the marketplace who certainly do care about whether or not you can repay the loan. Large financial institutions are very credit focused. What is your credit score? And your credit score really answers for them the question, will you repay the loan? And I determine the answer to that question by how I see you pay others. That's what your credit score and report speaks to. Cash flow speaks to, can you pay this loan back? Now, Danielle, The next question is for you. You are different from the large financial institutions. Would you tell us what the distinction is about CDFIs and BBIF in particular that makes you different from the Bank of Americas that are out there in the marketplace?
So thank you. With BBIF and other CDFIs, community development financial institutions, our job is to get money into communities that are maybe too small and maybe not prepared for a bank loan. So with BBIF in particular, we like to add our technical assistance and our finance, which are loan products, to small businesses to help them grow. And really what we're looking to do is to make sure that these small businesses, they can come to us, stay with us for the life of their loan. And then if they need additional financing, they could go to a bigger bank. And what makes us, I'm sorry, my dog.
Don't worry, Danielle. Mine is sitting right next to me, and it will sound like an earthquake if he,
I have
decides to make noise.
So
Okay,
calm
great.
down. So with BBIF, we really do focus on those smaller businesses who need hand-holding. So exactly what Jeff was talking about, being prepared. It's the same thing with us. A loan is a loan. It's going to impact your credit. It's going to impact your business. It's going to impact your cash flow. So if it's already in a place where you're not sure if you can afford a loan, coming to us, we work with you to get you to that place where you can get a loan. We actually work with banks because there are a lot of small businesses that go to banks and there's one or two, maybe three things missing. So we work with them and we're probably able to give them a loan that the bank isn't. And by the time they're finished, they can go to that bank. CDFIs, we're regulated by the Treasury. We report to the CDFI fund. BBIF, we also have Aries ratings, which are the new standard in the industry. So we're regulated similarly to banks, but we're a lot more flexible with what we're able to do. Just because we can go smaller, we do micro loans up to 50,000. Some of us do character-based lending instead of credit-based lending. So if your credit isn't all the way there, if you ask a CDFI or another small lender, do you do credit-based? And they say yes, that's a great place for you to show who you are as an individual and someone who really does believe in your vision.
Wow, that's great. I actually had never heard of that before. I mean, I'm aware generally of the concept, right, of character-based everything, right? You make some determinations about who you'll do business with based on their character, based on where you see them going, not kind of looking at where they currently are. So I like that. The thing that I heard you say that is really important, and as you mentioned, dovetails into some of what Jeffrey talked about, is that CDFIs and organizations like BBIF provide technical assistance to business owners. It's not just a transaction of you want money, I give you money, and that's that. Can you flesh out a little more for us? What does it mean that you provide technical assistance? What kind of technical assistance?
Okay. So with BBIF, we specialize in financial technical assistance. When you become a client of ours, we're going to want to see your financials every month. So that's balance sheet and income statement. We want to see how you're doing. We want to track your changes. We want to track your growth. We actually use a program called Growth Wheel. So you become a client and we take a 360 look at your business to see where are the areas that you need more help. Most of our businesses most definitely need help with finance, but sometimes with other things. If you're a contractor, you may have a hard time bidding. You may have a hard time getting bonding capacity. If you are a small business and you aren't getting a lot of clients, but you have really, really great services or products, it could be marketing. What a lot of small businesses don't actually understand sometimes is that you need to be very well connected. Whether that's with your local SBA office, SBDC, the mayor's office, it's so important to know what programs and what people are out there in the community. So with us, we can help strategize with those small businesses in growing that community. We call it an entrepreneurship ecosystem. So it includes everything from policy and legal to financial to customers and marketing. And that's really what we do with our technical assistants with that 360 look to make sure the businesses are strong in as many areas as possible.
Now, does that technical assistance cost the business owner anything
No,
to
actually.
partake of and to utilize?
No, so if you are a loan client, it's something that you should do unless your financials are at a level where you don't need to do it. And then we do it on a case-by-case basis with people who apply. So sometimes people apply and they're not quite ready for us either. And what we do is we'll take them through technical assistance. Sometimes it takes 3 months, sometimes it takes 6 months, but we do help. Actually, sometimes it takes 2 years, but we do our best with that to help the small business owner, and we keep it free by our loan programs. They help really to finance what we do, as well as grants and support from different banks and even the federal government.
Wow, I really, I'm so glad that all of that is involved in getting a relationship with a CDFI, with BBIF. You know, when I first started my career at SBA, I used to be so furious. What do you mean these banks aren't going to give them a loan? We give them this, major 85%, 90% guarantee. They can give these businesses the money. Blah, 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 blah. And believe it or not, Jeffrey, at that time, a friend of mine had left the Commerce Department and was working at Bank of America. And he explained to me, no, Althea, we are risk averse. We are not interested in being a partner in the business. We really just want to give you the loan and you just pay it back, on time, without stress. There are things we can do, but we're not invested in the risk taking of business ownership. And so I thought, oh, okay, so this is the role that you play as a financial institution in business, the economy of business, right? So it's good to understand that as part of this overarching theme that I'm hearing, that it's really important to understand who you're getting in league with, right? If you're just looking for a transaction, and you've got the financials, or SBA is willing to guarantee your loan, hey, a big financial institution may be the way to go. If you could benefit from a little hand-holding, you might even consider a CDFI like BBIF to get that hands-on. Accountability is really a word that I love. I know a lot of people run from, but what'd you say? You're going to check my financials every month? Yeah. Well, then I better be ready, shouldn't I? Ready with my questions. How can I improve it? Oh, things are going great. What can I do to capitalize on that? How can I strategize to keep this upward trend going? Oops, I had a blip. Why? Come with that question, right? And so so talking about my friend from Bank of America, Ariel, they're not interested in risk, but you're not afraid of a little risk, right? You're a venture capitalist, you're a fund. And we know that Shark Tank has put venture capital at the forefront of small business understanding about financing, right? They've seen the show, they've seen the sharks, they've seen people come and score, and some people just really implode in front of the panel, right? So tell us, how should a borrower successfully approach your organization that is distinctly different from approaching traditional lending sources?
So I love the conversation that we've been having about time, because I think that there are different types of capital that are applicable to different situations. And so you never want to approach a VC fund if you're on a tight timeline to be able to get capital. Usually, to close a deal could be anywhere from 4 to 6 months on, the low side. And that's everything from probably the first 30 days of preparation that you need to make, which is, getting a basic term sheet in place, a cap table in place, your pitch deck in place. And your pitch deck is basically like a condensed business plan that walks, the fund through kind of who you are, what your business model is, and, kind of a brief overview of your financial, history and your financial projections. In addition to that, you also need to have, a kind of a separate Excel sheet that breaks down what your financial history is and what your financial projections are. And for those startups who are literally brand new and they don't have proof of concept, what I would say is that you're probably going to want to look at other forms of capital just to be able to establish at least that basic level proof of concept. And it could be anything from as simple as, hey, we, put a landing page up, about this concept, and we ran some ads and we were able to get, 10,000 people to join a wait list. That can count as proof of concept, right? And so you might have to go and, get, a small, personal loan to be able to fund that initial kind of proof of concept. But those are the things that VCs are looking for. They don't really like when you come, to us like, hey, I don't really know, if this is going to work. I just know I have a great idea, and this is my plan for it. It's like, okay, but where's the proof, right? So 4 to 6 months. And then I would also say in terms of your term sheet, there are a lot of things on the term sheet that you have to take the time to understand. So like, what's your pre-money valuation? What's your post-money valuation, after you receive kind of the minimum amount of capital that you're looking to go over, that you're looking to raise. And so what I always say is, for us, we're really blessed to, have started as an incubator. And so we're very familiar with founders and their process. And we do the work of helping founders get prepped to be able to have those conversations with funds if they decide to go that route. But I always say is that you have to be prepared. And I always say to founders who come to me, like, I want to do, a raise. I'm like, also, what other forms of capital have you thought about, and what have you looked at to go after? Because the process of getting backed by an angel or a VC is not for the faint of heart, and it takes time. So I would rather actually point you in a different direction to be able to get the capital that you need to get started, and then come back and talk to me in 6 months, 12 months, et cetera. If you really are serious about raising investor dollars.
Awesome. Well, you have thrown out terminology that underscores the point that Jeffrey brought up in the first place about understanding having a vocabulary, right? Being literate in the whole financial arena. Again, you don't want to approach a VC with the wrong terminology, right? What have you heard, Ariel, over the years or recently when you have been around folks who want funding from you that is a clear tip-off? They don't understand venture capital.
Honestly, the first thing is just not having proof of concept, right? So it's when you don't have any financial history or any track record or, audience building, audience development history, et cetera. I mean, that for me is a clear indicator that you don't understand what investors are necessarily, looking for. And again, that's not a bad thing. It just means that you have to take some time to really understand what capital you should be going after. I'd also say when it comes to, what's the valuation for your company, kind of pre-money before you actually get funded. How, what is your EBITDA, what are your earnings, before taxes, interest, amortization, et cetera. So these are kind of like, terms that, most people, it makes their eyes get kind of big and they're like, what are you talking about? But if you actually, take the time to go through an incubator, if you take the time, to talk to even other founders who have gone through the process and who have successfully raised, they will tell you, that these are things that you have to know and you have to keep in mind. And, you do need to have, really like the proper kind of financial documentation and knowledge to be able to successfully raise. Unfortunately, we're in a time where, it's still news when, a Black woman entrepreneur raises over $1 million, in VC funding. So for us, it's about how do we reach out to underserved communities to be able to educate them about this process and to be able to get more, startups that are founded by, Black and Indigenous founders, into the rooms where they can tap into VC dollars and we can actually, do the work of creating a more equitable kind of financial landscape.
Yeah, and you know, that sort of brings up a notion about fear. But before we talk about that or give any place to it, I want to bring in Dr. Joe, because we've been talking about necessary timing, education, you know, preparation. You're a professional planner, right? You lay out plans. And you keenly understand the value of having a plan, but is it enough to have a plan? Or, you know, because I have a plan, but I never execute on it, what's the value of the plan, right? And part of planning for the future, doesn't it necessarily mean taking an assessment of where you are currently? And if so, tell us about the value of doing diagnostic assessments of yourself, of your business, as you begin to embark on creating a plan.
Yes, well, yeah, first of all, I'm learning some great things here in what Ariel and Danielle brings to the table. I'm looking forward to some offline dialogue here. Just want to put that out there. But yes, when it comes to planning, it's simple as planning starts at home. You know, I have a simple saying: if you can't be the CEO of your household, how will you become the CEO of a business? So we do take an assessment of where you are at home, and you know, figuring that there may be a different dynamic when it comes to the audience. If you're at home, that's a great thing. They have the advantage of being at home, but you still want to look at a plan and to ensure that you're within yourself, you're stable. So whatever your expenses are within yourself, you make sure that those are stable. You want to have a cash reserves in place for yourself, as well as to put one into place for your business. And how you can tie those together can be through like a microloan. Because if you are working and you're looking to transition into a small business, then if you get that microloan and your business can't pay back that microloan, then you may want to take a step back to see if this thing is actually going to work, which leads to that idea of proof of concept. So yes, you want to put yourself in a position where this proof of concept makes sense. Also, you're solving a problem, and then there is a market for it. And I even tie myself into how this transition for me. I was a technician at Florida Power and Light, and I actually took a 6-month leave of absence. And my niche started off at the time, and it's definitely have morphed and grown over the years, was to work in the churches and providing financial empowerment education and basis, starting there, which actually led me into working in the small business area. But I saw the problem. There was a problem that was there, and we have more time. I talk about it, but start off with in the church for me was a big thing. But then in working, I had a cash reserves. I had a cash reserves where I had things saved. But if you don't, then proof of concept, there's definitely opportunities, I'm sure, at least with Danielle, when it comes to a template and putting together that basic business plan. SBA has templates all over their website. But to put that in place and to get started while minimizing risk and while not tying your household into your business. So looking at this, from the outside looking in, allows you to take some, everything is risk, but some educated, informed risk, and minimizing those risks over a time frame. I took a 6-month, and then of course I had monies that I had saved over that time to go into this. But instead of just going into it with that willy-nilly idea and just putting the cart before the horse, as they say, there's many ways to, again, plan, starting from the household and just going out from there. And then looking to starting off the cash reserves at the household and then working towards proof of concept by getting involved in these programs to get yourself to where you can actually scale yourself to the level of working with a bank.
Wow. Dr. Joe, I am so glad that you mentioned that, because that's going to lead us into our conversation next about pitfalls. But what we've heard so far, I hope you all have noticed, is that financing a business runs along a spectrum. And Dr. Joe, you added the first and hopefully typical finance source, which is yourself and your savings. friends and family, you know, people who don't report to the credit bureaus and who don't, disown you because you owe them money, hopefully. But it starts with, self-investing and self-financing. And then it moves along of the spectrum towards Danielle and BBIF and micro lenders, CDFI, mission-based lenders, to traditional financing organizations like Bank of America and larger financial institutions, all the way to Ariel's group, which are venture capitalists, right? Who are willing to take the risk with you, and you potentially have access to greater amounts of money. So again, remember who you're talking to, because the conversation you have with friends and family is a distinctly different conversation from everybody else along the spectrum, right? And it's okay if you come to Danielle not fully having it all together, because she's got financial tools and accountability structure to help move you along. She doesn't want to be your last stop financing option. The goal for many CDFIs is to bridge you over to being able to have a meaningful relationship with Jeffrey and Bank of America. And then when you get so awesome that really it's just too scary for the bank, right? They're just like, I don't know, they're biting their fingernails. You've now run into Ariel. This is her comfort area, for risk. So be aware of all of those different players in the marketplace, be able to speak their language, right? You learn the vocabulary of your audience, and that will give them greater confidence in working with you, because you speak their language, they know what you're talking about. And so, Dr. Webb, you talked to us about the tying of your personal with your business. And that is a typical pitfall that we talked about briefly yesterday. And some of that happens, right, because you're bootstrapping your business, you're using your personal credit card, you're using it for business, and you've tied them up, and you really need to untie them. Why is that a pitfall, Dr. Webb? Why is that something you really ought not to do? Or even if you've done it already, it's okay. How do you extricate yourself from that particular hold?
Yes, you definitely back out of that thing. A lot of times this happens where we're funneling our business revenue through our household, and what we want to do there to prevent, well, first of all, in doing that, you open yourself up for all types of lawsuits and litigation. You want your business to be your business and your household to be your household. One of the things that you can look at there, and this is actually what my CPA taught me years ago, is you do want to look at what your monthly expenses are. So whatever your monthly expenses are, make that your salary. So now out of the revenue, and then you'll know, okay, I fell short this month, or I didn't, or I did this, and you can actually see where your profit margins are, again, from the starter kit perspective. So knowing where your monthly expenses are, you give yourself a salary, and then you shift that over to your personal account to handle your personal. And then, of course, your business expenses will be your business expenses. One of the other things I've seen happen as well when it comes to taxes is to understand, you should understand that you are no longer a W-2 wage earner. You starting off 1099, and however you are from that point, running it through your business, while there's taxes to be paid, there's Social Security to be paid, and if you have staff, workman's comp, and all types of other things. But let's just stick with being yourself. You still must pay taxes and Social Security. So, when you make that $2,000, $3,000, $1,000 per month, that is $1,000 minus taxes, minus Social Security. So you want to be mindful of that.
Come on, Dr. Joe. No, I don't want to give the money to the tax man. In fact, businesses, practice what they call tax avoidance and mitigation, when in fact what they're doing is tax evasion.
Exactly.
And there are
Exactly.
long-term implications for that, Dr. Webb, as you know, not the least of which is you incur the wrath and attention of those terrorists at the IRS who will make your life, what's left of it, a living hell to get the tax that you owe the government. And but also, Jeffrey and Ariel and Danielle, whoever wants to answer this question, there are long-term downsides, right, to playing funny with the money, not accurately recording whether your revenues, your income, your taxes, you pay people under the table, etc. Why? What is the implication of that when it comes to growth, right? Now you're ready to grow your business. Things have been going well, but you haven't been paying your taxes the way you should. Things are not really as they should be on your personal returns, your business returns, and what does that do? I think business owners don't really appreciate what that means for them in the long haul when they're now ready to come for financing. How do those documents undermine their ability to borrow? Danielle, I know you've seen it.
All the time. So really when you tax evade, tax avoid, your loan amount is actually lower. Our ability to lend to you is actually lower. We go based off of your internal financial documents, but especially with an SBA loan, we have to go based off your taxes. So if you make no money on your taxes, we can't lend to you.
Right. So break that down a little bit.
Okay.
I file my tax returns and I show essentially what? No profits?
No profit, negative profit, zero profit. You don't pay a tax bill. Your internal financials and your bank account show something different. And we know that's normal with the accrual versus cash method and how your accountant may do your financials. But if consistently, especially for the past 3 years, it's negative, we can't lend to you, especially with an SBA loan, because that's based off of your taxes. If you made $100,000 in profit, but your taxes don't show that, officially your company doesn't make any money.
That's right. And after 3 years, the IRS pretty much decides you have a hobby, not a business.
Yeah.
And so all of the benefits that would inure to you as a business owner, you don't actually enjoy.
Yes.
So how can a business, well, before I ask that question, Ariel, in the VC arena, does this matter to you, whether my taxes match my activity?
Well, you're going to have to do some explaining. I won't say that a deal can't be pushed through, but obviously, when, kind of VC teams are doing due diligence and we're going through your internal financial documents, your balance sheets, your profit and loss statements, and we're comparing it to what you filed for your taxes. I mean, yes, most of us are very familiar with, business and startups and how sometimes people can be a little aggressive on taking write-offs, but you're going to have to explain it, because at the end of the day, we want to make sure that the business is actually, really profitable and that you have the proper financial kind of management team, CFO, et cetera, who is going to protect, the interests of the investors, as well, and make sure that, whether you're paying out dividends or whether it's, preparing to make an official exit, IPO, et cetera, in 5 to 7 years, that your financial documents are on point and we see the profits. So it's definitely something that can be done, but yes, you're going to have to explain yourself.
Right, because I guess for you all, investors don't want to be on the hook when the reckoning happens, right, with the IRS. They're going to go looking for everybody and anybody to get their money, right? And by the time they show up making demands, they've hit you with the interest and the penalties, which really stack up and become truly problematic. Jeffrey, is there any other pitfall that jumps to mind when you think about businesses prepping themselves for borrowing? that we haven't covered yet?
I was thinking of, what Danielle, Ariel, and Dr. Webb were just saying, and it can be more true, right? If you want to grow, you have to show growth, right? I mean, that is the bottom line. And when I said earlier, make sure that you have a team of professionals that you trust and you can grow with, including a bank. Well, that includes Dr. Webb. You need a financial planner or a CPA, someone that you can have a candid conversation with, saying, you know what, in 2 years, I want to, buy a commercial property, or I want to buy my food truck, or I want to buy the restaurant man. Well, you know what? I mean, that's gonna take some time and work, and you have to show some money. I mean, if anyone's gonna lend to you, and this is Danielle, Ariel, myself, I mean, you have to show us that you have a track record, that, hey, you're making money, so that's your revenue, so that's money coming in. But then that you have a bottom line. If you have, if this is your first year and you're showing losses because you bought equipment, or you have some bad losses in your return, and that's okay. But if that's year after year, and you're going to an accountant that's saying, you know what, let's not pay taxes, let's write this off, and you think that's okay. Well, that's not okay. That's not okay if you think that you're going to go into a bank, or to Danielle, or to Ariel, and ask for money, and you're going to say, well, you're my bank, you can see my deposits, you can see what's coming in. Right? I mean, you have my transaction history.
Jeffrey, I'm
right?
Sorry to cut you off, but you are on to something right there. I don't want people to miss it. Accountants are probably on autopilot to mitigate your taxes. Mm-hmm. And if you don't stop them, they will stop your growth. Meaning, because you probably started out telling them, I don't want to pay any taxes. Who does, right? Mm-hmm. But when you've made the decision to grow, you've got to let everybody on your team know. The accountant has got to switch tactics as it relates to your tax returns to prepare for the growth you say you want, which underscores the value of having a vision for your business. Okay, so what happens, I think, and I know that, this is experientially what happened in our lives here at my house. My husband always knew he wanted to work for himself and have his own practice, right? But when he first started, it was grind, 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 grind. And then you start to get a little comfortable, but you've got to, as a business owner, you've got to lift your head from the daily grind and make a decision. And I would dare say, dream a little before you decide, right? Dream a little. Where are you going with this food business of yours? I mean, you've clearly started based on a passion, a thought, right? But what is the end of this thing? Because if you don't have a grand enough vision, all you really have is a job that you created. Okay.
Yeah.
So right. So talk to us about the value. You're a banker. Okay. How often do people come to you in the process of seeking financing where their vision is clear and you're able to catch the passion and the vision and help them with it?
Yeah, it's funny because you sometimes you think that, there's a client that knows where they're going, but when you when it's time to get to the lending process and you ask for financials, it doesn't match the vision. The story of their tax returns, personal financial statement, interims, balance sheet, it's not matching what you're telling me, right? And that goes back to what we said about accountants, CPAs, financial planners, depending if you have a good one, being an autopilot. But it can also be because your vision, your long-term vision is not clear, right? If you're looking to expand and purchase something, then that needs to be part of your vision today to get you to the long-term growth. And it goes back to making sure that you have it, and I can't stress this enough, because especially for those folks that are starting off, having a team, having a banker, an accountant, someone that you can trust, a financial planner that you can trust and have a discussion with. It's extremely important because a lot of people, no one wants. Raise your hand or on the chat. Who wants to pay more taxes? No one. Let's not be ridiculous. No one wants to pay more taxes, right? But something you have to pay, something you need to give a little if you expect more back in the future. So that needs to be part of your financial planning. And one final thing I would say, sometimes growing too fast is also an issue. And I see that all the time. Restaurant or food truck or a meat or food and beverage distributor that's doing well the first couple of years, all of a sudden they take on too much and then it goes downhill, right? So make sure that you know what you're doing, grow at a pace that's reasonable, and also for banks, that's a red flag. If you're showing, you did $500,000 in revenue, and next year you did $1 million, like, okay, what happened here, right? Why the huge jump in revenue? And Danielle's shaking her head and saying yes. These are red flags. Even rapid growth is a red flag, right? So be sure that all this is
a good idea. Even though on the surface you would think this is great.
Yes, so even though on the surface it might look great, and you may think, well, how is rapid growth bad? Well, it could be bad if you don't have the capacity to sustain the growth, right? And that could be management, that could be experience, that could be personnel, that could be technology, right? So make sure that you know where you're heading, right? Have a team that can help you get there and make wise decisions. And like Althea said, make sure that whatever vision you have matches your financial picture, right? So it's not about, I'm going to avoid one. So there's a difference between tax avoidance and tax evasion, right? There's a difference.
That's right.
Right? But make sure that they both are together and have one clear picture.
So Dr. Joe, Jeffrey talked about the vision, and, the world's most published, most purchased, published in every language, has the statement that a vision must be written. It should be made plain so that the folks on your team that Jeffrey talks about, knows what's going on, can help you run that race, because the vision is for an appointed time. It will happen. Now there's going to be stuff to run, kind of try it, to test it, to slow it down. And maybe there's a COVID in your future. But what is the value of writing down this vision or having the vision in the first place, right? You got to have one of those. It's not about the daily grind of making the juice, of making the tacos, of making the desserts, right? It's about something more. How can, why is it important to write it down so that it actually comes to fruition? Can you talk about that for us?
Yes. Nothing like the power of writing it down. When you write something down, it automatically gives you a level of accountability to yourself. And of course, accountability to the team that may be around you, because now you're answering to someone. And it's the first step in putting the work in. If there's an old saying, if you don't know where you are, how do you know where you're going? To establish where you are and then put those steps into play are key. And then to have someone that can actually hold you accountable for that. So, the steps, it just creates the vision, which creates the path. You can actually see the road ahead, and you can create some expectations. And if you fall short, you know why you fell short. But if you don't put anything down, you're just walking aimlessly, just waiting to be, I call it, hit upside the head because of something that you didn't take into account. So writing it down provides that clear path. And I always say, that's the key too, because we don't, I want to just be real with with what we're saying here. I appreciate all these good answers. You want to know why you missed the why you missed the goal, or why you missed it. That's the key, is knowing why you missed it, so you can make those adjustments along the way.
Right, but if you don't have,
I don't want to hype
you'll miss
it down
every time.
Well, what if you fall short? then you know why you fell short, and you make the adjustment and keep it moving.
Right. Ariel, how important is a vision for the venture capital community? Do you just, let people roll in there with no ideas about the future?
You know what, I say the biggest, I think, factor when it comes to closing a VC deal is basically trust in the founder, right? And so it's the founder's responsibility to have vision, and to understand the landscape, and to be able to basically explain how their concept, their business model, et cetera, is going to be able to sustain and evolve, throughout the times. VC investments are usually not short-term investments. You're looking at anywhere from kind of 5 to, kind of max 10 years, before we're expecting some sort of exit or payout or, whatever. And so, it's really important for the founder, for us to be able to trust the founder, to be able to kind of navigate us, to be the captain of that ship, through, whatever waters, may come. And so what makes companies great are not ideas. What makes companies great are leadership, through especially, times like this. And so it's been, I think, a joy to see just how resilient, a lot of South Florida businesses have been, during COVID. And it's shown real grit and real leadership, in terms of them actually being able to come out on the other side, going into this new year, and being, I think, better CEOs now than they probably were before when this all began.
Well, that's awesome. Without question, COVID has had a meaningful impact on businesses, right? Some good, some bad. It's profoundly bad. And the clarion call has really gone out that businesses must pivot during this time. Particularly, well, I don't think it matters whether it's good or bad for you, right? If COVID has been good for you, you've got to pivot to continue and look towards life beyond COVID, right? You're in prep phase to ideally move beyond COVID, because COVID is going to, we hope, come and go, right? You've got to pivot if COVID has been bad to you, just for the sake of sheer survival. And we've seen this especially in the food industry, right? Where, and not so much, thank God, in Florida, but in other parts of the country where, states have shut down restaurants, they're not able to do anything. Even in good states like ours, capacity is limited, right, by the need to social distance. So we've seen that a lot in the food industry, and some have made the shift, right? Whether it's walk up, takeout, Grubhub, or whatever other mechanisms have been used by businesses to pivot. And I would ask each of you in turn, what can businesses do, particularly food businesses, do to pivot not only from business before COVID, but for a success strategy for during COVID, right? So you did business one way before COVID, now you're doing business perhaps this way during COVID, and preparing yourself with a strategy for a post-COVID environment. How can businesses do that? My sense of it is, in part, is to take some time to think through that, right? To reduce panic, right? That the actual panic you might be in because you're wondering how to get this done. Fear is can be a healthy thing, right? Don't want to get run over by a truck, so you stop and you look both ways, right? You're respectfully fearful of being run over. But fear is a paralyzer otherwise, and now is not the time to paralyze. So why don't we start with you, Dr. Webb? What can businesses do to strategize around pivoting because of COVID?
Well, I'll tell you, as Ariel mentioned, I've seen a lot of resilience there in South Florida. Everything from some small restaurants building a walk-up window and adding it to their restaurant, to adding a patio. I mean, I've seen some major, just good to see major adjustments that were made. So as a whole, what they did in that was they still allowed it to be as personable as possible. You know, I'm one of those that's I'm not as far along in social media as I'm sure even a lot of you all are, for that matter. But social media has been a shift, or even virtual. Maybe I'll just go even virtual, doing things virtual has been a shift. But there's some things you can do that still allow it to be personable. People still have an emotion. There's still an emotional thing to an educated and informed decision. It's still a relational. And I believe Jeffrey talked about this, is how you dealt with that person and how you related to them. So still adding that to that, to that experience in all this is definitely key. And I've seen it, like I said, from the restaurants. Yeah, you may not be as 50% capacity, but now they have a walk up, they have a patio, they've made the adjustments, and they still allowed to be a good experience for that. And there's been more purposeful evaluations, evaluate the experience. And then, of course, that's where the social media and all those things come in. And I'll admit, I'm trying to catch up in that space. But with the virtual component, even what I do when it comes to advising, I've created an experience through the virtual versus, the belly to belly and sitting in an office and all that. So I've actually worked on some things. So I think that's key. That's key into making the shift, as you would call it.
Ariel, do you have any thoughts about it?
I think when it comes to the word pivoting, it's probably been the most popular word of, the year. What I would say is that I hope that the last, 6 to 8 months has taught us, or at least given us a slight glimpse into what actually works in these kind of new times versus what doesn't. I think the mistake that people, might be making is thinking that your business is the same and it can be run the same as it was, prior to COVID. Unfortunately, we've seen, staffing structures, have to change, and leaner operations have to kind of be the new norm, just to be able to survive. And so I would say dig into that, dig into what does it look like to run a leaner operation, to be able to survive these times, and also to be able to scale on that leaner operation. You have to do what's best, for your business, and to make sure that you actually have the ability to be around, next year and to grow, because that's, eventually what we're all here to do. So yeah, I would just say, take the learnings, from this year, continue to build upon it, and definitely tap into the resources and people around you who have been through some times, like this in the past. Maybe not exactly as a pandemic, but know what it is to kind of run a business in a recession, know what it is to run a business in hard times. It's that type of mentorship and leadership that you want around you as you're navigating through 2021.
What I heard the two of you say, which I thought is really key, Dr. Webb, you talked really about connecting, right, with your customer relationally. COVID has been awful because we are disconnected from one another. And while we're all connected here through technology, it is a connection of a sort, but it's not the preferred connection that people want. And so to the extent that your business can create connection, relational connection, fellowship, right, through your business, I think that's going to be key. And you said also, Dr. Webb, about being purposeful, right? Deliberate, intentional about the things that you do to evaluate where you are. Ariel, you talked about that too, to an extent. Evaluating where you are and embracing where you are to really begin to plot a course for the future. And I'm of the opinion that, which I don't often share my opinion, but I'm of the opinion that, COVID is either going to get gone or we're going to get really good at how to live anyway, right? Despite COVID. And so it could very well be that 2021 does not look anything remotely like 2020. So we've got to be mindful of that and hopeful about that. This month is a month of hope, with the season where hope is celebrated. Danielle, do you have anything that you think is really key to helping a business owner as they approach 2020?
Yes, honestly. First, please pay your taxes and pay them correctly. A lot of our business owners came to us and they weren't paying themselves this year, so they couldn't get PPP. So that's another thing to keep in mind. Paying yourself on your taxes lets you access these government programs. But I would also say take the time to sit with your accountant. And if they can't do this, find one who can, to go through what are your days cash. If you close business, how many days will you last? Imagine different scenarios, hurricanes, another pandemic, and really get an understanding of what your business can weather and what you can't, because that will give you a good idea for this coming year. Those are really two things I would say. I like becoming an expert on social media is a great way to really market your business and market your personal brand, but you really need to have an inside out understanding of what your business is and what it can handle and what your financials are.
So we've come full circle, in terms of the advice that we started out with in the beginning is a common thread throughout our discussion, that in order to really grow, right? We've been talking about growth. That preparation is key. Purposeful thinking is critical. Jeffrey, what have you seen maybe on the lending front with respect to growth? We have actually a question that came in the chat that I thought we should really sort of maybe talk about. Sabrina wants to expand into grocery stores, and that would require an increase in productivity, production, facility capacity, and capital. As she talks about growth from a lending standpoint, what you're seeing in the marketplace, at what point would you advise such a business to contact a lender?
Well, I mean, I think I mentioned earlier that the bank released its 2020 Small Business Owner Survey, where we survey over 1,000 small business owners across the country, and 79% said that 2021 is going to be a much better year. They're very optimistic. And one thing that continues to resonate throughout this report is resiliency, right? So, people are extremely resilient. So what I will say is that, make sure that you close the year properly, right? And I know, this is a very strange year, and that's easier said than done for many of us. I mean, I include as well, and I think we can all resonate to that. But that long-term goal, if the expansion to other chains and other revenue sources that can help you expand, make sure that you close the year properly. And I think Danielle said something that's very important. If you cannot speak to your accountant or financial planner, get a new one. I mean, if they don't have the time of day for you, and you calling, leaving voicemails, and Dr. Webb knows what I'm talking about, and they're not returning your phone call or giving you the time of day, get a new one. There's plenty of people out there. Ask for recommendations. I love November and December because this is the time of year that we close out a very dynamic year that 2020 has been. But it also allows you to get ready for 2021, right? So, if that's the goal of expanding, the time is now to have that conversation with your financial planner before you file your tax returns and whatnot. So that's my advice to that person that asked the question. Now is the time to get ready for tomorrow. Tomorrow is too late.
That's right.
Tomorrow's too late. Tomorrow's too late. So make sure that you speak to someone that can help you get there. And like Danielle said, if they're not answering the phone, find someone that will. There's plenty of good people out there, that can give you really good advice. And don't spend an arm and a leg team. I mean, don't spend an arm and a leg for the advice that you can get from other people. Just because you see a big name firm, doesn't mean they're the best for you, right? So just like I said earlier, make sure that you interview people. This is not you that's trying to get them. This is your business. You interview them, and they need to earn your business. I mean, that's how I see it, right? It's a privilege to work with people especially small business owners that are close to my heart because that's what I do. But make sure that you take the time to speak to people that really have the right of heart, to make sure that you get to where you need to get to.
That's fantastic. I mean, there is a difference, right, between a tax preparer, right? Because, listen, you talk about get another one. My husband just has a law practice. And I don't mean to make like it's, not a big deal, because it is, thank God. It puts food on the table here and some extras. But we have gone through, I can count on two hands the number of accountants we've gone through in his 25-year business history. If, somebody with QuickBooks can frankly, QuickBooks and what's the other one? The thing that does the taxes can file your taxes, but that's not necessarily going to get you growth and towards growth, as we've really discussed, I think, here today. So as I wrap up our panel, I want to warn you that you can put your questions in the chat. We'd love to answer them for you. As you do that, I'd like to give everyone a chance to share with us, sort of your one hot tip, your one best thought, idea, suggestion, whatever you want to call it for our audience for 2021. Ariel, let's start with you.
So I actually saw a question in the Q&A box that I want to answer by Ian just really quickly. He asked, is there a good resource for calculating valuation, that they're self-financed and the past theoretical stage and first order stage? So what I would say is that if we're talking about in terms of investors and looking at a pre-money valuation, a lot of it is based off of beta, but valuation is kind of something that you can play with, I think, and the right advisor can kind of help you navigate that. So I've heard, obviously a beta times 6. So if you go and you look through your financial documents, when you're looking at your earnings, you should be able to kind of start to, calculate that, but also take into account, do you have, a facility, or, do you have significant brand recognition? All of those things also hold, basically the ability for you to argue for a higher valuation that might just be just your EBITDA. So I wanted to just say that. And then, I think my one final point, to everyone is, just to continue to, do your research, to know all of the different capital options that are out there and available for you. And to really just, take some time over the holidays to celebrate, because I think that so often we get so caught up in all of the hurdles that we've had to overcome, throughout our businesses, but really take the time to celebrate just how far you've come, despite how this year was for you. And then also start to kind of create a vision for what 2021 can look like, for you. Anything is possible. Don't feel defeated. And definitely, I'm sure, myself and the rest of the panelists are here to support you.
All right. Thank you, Danielle.
I just want to go back to taxes. Good taxes start with good bookkeeping. Keep your receipts, track your expenses, make sure you're categorizing them properly. You should have a conversation with your accountant about how to categorize your expenses and what they're categorized under, so that they can track what you're spending. And also make sure you're tracking your revenue as accurately as possible, either through a point of sale technology or through QuickBooks or Wave or some other bookkeeping, depending on what you do. That's all very helpful for you to understand your business and how it works.
Danielle, I'm so glad you said that, because one of the points I wanted us to bring out and talk about a little bit is essentially what you talked about just now: garbage in, garbage out. Okay. So talk just briefly about during this time of COVID. I think it was you, Jeffrey, yesterday who told the story about how you got your dog groomed the other day, and the gal asked, "Oh, just Zelle it to me," right? Meaning pay me cash under the table, into my personal account, not into the business point of sale that can be tracked. What happens when you have garbage data and these evasive maneuvers that you use? How is that going to undermine growth in your business?
So when you pay under the table, the first thing we want to look at your personal finances, and that gets very embarrassing very quickly. The second thing is you don't know what's your best seller. You just have a feeling. When you're tracking accurately, you know accurately what do people like. And so when you see something happening with your financials, you're not making as much as you used to, you can go back to your records and see exactly what's popular, exactly what went down in popularity. And for us, it lets us know you know exactly what you're doing. And it makes us feel more comfortable, especially for those character-based loans. We want to make sure you have good character. And when you take money under the table, that reflects negatively on you.
Wow, that's so heavy. Yeah. What you just said, right? I mean, you know, that best-selling book I mentioned talks about that a good reputation, a good name is more valuable than riches, right? And once you destroy your good name, like, which is what a poor credit report is, right, to some degree. And once you've been uncovered, right, where Jeffrey, you talked about earlier, how your stories don't match. Now, I guess at best, you appear ignorant, right? That I just didn't know. At worst, you look like a crook, right? So I love that your best advice for 2021 is to, you know, good data. Commit yourself to good data, right? Accurate data, because that, you know, good input is going to give you good output. Jeffrey, what would you say to folks about 2021, your best advice?
You know, I've been so inspired this year with the small business owners because 4 out of 5, according to a survey, you know, remain open, you know, and it's tough time, and that's impressive. And I think about 2008, the people, if you were around, but in 2008, during the financial crisis, the companies that survived that, you know, we went through some turbulence and it was an experience, but made them stronger, right? So what I will say is that, you know, 2021 is going to make everyone more resilient, stronger, and going to, in the end, make us better and more prepared for not just a pandemic, or hopefully it doesn't occur, but anything that can occur in the future. But I'm going to end, Thea. That's how I started. You know, get a team of advisors. You know, just like you have a good quarterback, and you know, I'm a Miami Dolphin fan, so I'm going for Tua to really lead the team to finally a Super Bowl win eventually, hopefully. But you need a good quarterback to be able to quarterback the team. You know, and sometimes, you know, that story that I shared yesterday about, you know, I went to the room and they told me to sell the money. You know, and I said, well, this is different, you know. But, you know, sometimes people just don't know. You know, people just think, you know, transfer funds, you know, it's a transfer of funds and that's it. You know, maybe they just didn't know that, you know, this is not what I'm not supposed to do because it's going to hurt me in this way and it's going to hurt my growth. But if I would have had a discussion with my tax professional or a financial planner or a CPA or an accountant, they would have told me, you know, this is not the proper way for you to be able to document your revenue stream, because Zelle is not, to your personal account is not right? So sometimes it just, you know, that not knowing rather than trying to avoid something. So what I would say is, you know, sit down with good people, you know, take the time to interview people, get a team, find your quarterback that can quarterback you to success, right? And I want to add, you know, 2021 is going to be a phenomenal year for everyone here. So thank you for everything that you've been doing. It's been a year that has truly inspired me. But again, you know, make sure that as you now start a new year, and this is the best time to do so, you know, like Danielle and Ariel say, make sure that you have all your ducks in order. And that also includes making sure that you find good people, and some good people here in the panel that can also help you get through that process as well.
It is awesome. Your comments and yours too, Danielle, reminded me that when we're not doing things accurately, right? you can get out of this thing. You can get out. If you've fallen into a hole of doing things incorrectly, you can get out of it. And the key is to have that team. You know, some people around you who know better about taxes, about business structure, about pricing your product, et cetera, can help you climb out of that hole. And one of the unfortunate examples that we have, modern examples that we have where garbage in, garbage out, is the Paycheck Protection Program loan that was created by the CARES Act back in March went and was closed in August with $130 billion left unclaimed by small businesses. And that's a lot of that is in part because people did not have the back of the house in order, right? They didn't have their infrastructure in place. They didn't have the tax returns already prepared. They didn't have good data to demonstrate that they were profitable, that they had paid themselves, things like that. Now, Dr. Webb, I know that's one of your key I don't know, I don't want to call it a pet peeve, but one of the things that you're very keen on, that your house be in order. In 2021, what would you say to folks about what your best advice is about that?
So first of all, I do want to wish everyone a Merry Christmas and a happy holiday season. I don't know if y'all noticed, but I have on my 'Tis the Season vest. This is about the season. Wasn't trying to be fancy. It's just a 'Tis the Season vest and a 'Tis the Season tie. So happy holidays to you all there. And I thought about this, and it's just we're on the topic of growth. I thought this would be a way to give them some advice. So we talked about the personal planning and how it is important just to have a basic in place. We're not talking about advance. We advance as we advance our business, but putting a basic in place to separate the household from your business moving forward is something that you must look at. And then, as I said, after that, while you're assessing that, you want to look at your first goal and being able to allow the business to pay for the expenses that you have at hand, and that is your initial payout. But the next step I want you to consider in this, and I can even tell you this from experience, if you're partners, then if you have a partner, then of course you look at these key areas. I'm gonna give you these key areas. The key areas are, this is what we talk about in my area of business, but you'll be able to relate to this. You have what's called the finder, you have what's called the grinder, you have what's called the minder, you have what's called the binder. So that finder is the individual that does the marketing, does the networking, builds the relationships, and all these things that creates the opportunity. And most of the time, that is the visionary and the person that started the business. So if there's a partner and there's an admin person that's you want to look at that partner that have some admin skills, or if you are a partnership, you both collectively look at bringing on someone that can handle some of those admin skills, because we all start off as being the janitor and the janitor, the salesperson, all this stuff. But eventually your next scale up should be to consider that assistant, because then there's the grinder. And the grinder puts together the proposal. The grinder does all the paperwork. The grinder does all the calls and the scheduling. And you imagine doing that along with the networking and how that can actually burn you out in trying to scale up your business. And then, of course, there's the minder. And the minder does the follow-up after the person initially said that they would like to see what you have. Now you're putting together that proposal for them. You're going to need someone to help you along with that process. I remember starting off in my business, and I was that electronics technician at FP&L. I'd be up late at night, late at night, 11, 12 o'clock, putting some things together because I went from doing this part-time to full-time. And then, of course, that binder is the one that closes the deal, signs the contract, creates the new vending opportunity for you, and allows you to continue to move on. So that person, as I said, can be a person with the admin skills, or if you have a partner that has those admin skills, that piece of advice there, it'll do more than double your business. I don't have the exact number because it depends on what area you're going in, but I can tell you that person, after you've covered your expenses and you bring that person on, the scale up it can be phenomenal. Definitely beyond double. So that would be my advice going into 2021.
Oh, that's awesome. Wait, tell us about the binder, because I knew about the first three, but who's the binder?
So the binder can also be the finder, because the binder is the person that's usually in front of that person, or usually the one that's actually talking about the possibilities. And now you've binded that contract. They went either and got the contract signed. If you become that vendor for that if we're talking about food and beverage, or you sign a contract for. I'm just the bar mitzvah party, whatever you're vending, or whatever it is that you're looking to do as far as that service. You signed the contract. You've gotten that contract signed, and you're able to move on to the next person efficiently. So that's what a binder. That's the closer.
Okay, great. That's wonderful. And you need these players in your business. And of course, you start out that way. As the captain of your ship, but it's really important to have the team, like Jeffrey has repeatedly told us. And if I may, I'd like to share my best piece of advice for you, not only in 2021, but forever. And that is, friends, take time to think. We are in information overload. Okay, we've given you a lot of information here, and I will endeavor to summarize it for you, but take the time to think. It is not okay to just keep eating information. You must eliminate some of what you have taken in. How are you going to you got to decide that by, okay, this was the best piece of information I received today. I'm going to act on this. I'm going to discard this. I'm going to put that over on the back burner. I'll think about that in 2021. But in order to be able to do that, friends, you have to develop a discipline for thinking, is what I like to think, how I like to characterize it. And how do you do this? Practically, okay? Start by taking a timer, your phone if you want, but it cannot be anywhere near you. Sit in a comfortable place I'm going to tell you old school, pencil and paper, because if you have an electronic device, you're going to look at that notification that just came in. You're going to look to see what time it is, how much time is left on the timer. The timer will make itself known when your time is up, okay? It's pencil and paper. Write an important question at the top of the page and begin the process of answering it. I believe that the answer is within you. Even if the answer is to ask another question and ask another person. The fact that you don't know the answer is an answer. Figuring out what you don't know is important. And then following that train of thought to who can help you get the answer. 10 minutes will seem like an eternity if you are not accustomed to taking the time to think. And then as you do this daily, and it can be any question, I'm hoping you'll make it a question about your business. How am I going to grow? Maybe your first question is, what is my takeaway from this session? Let's talk growth. It can be, how do I expand my market? How do I apply for that grant to reimburse me for my COVID expenses, right? There are grants popping up all over the place to help, especially the food industry, with meeting some of the costs associated with complying with COVID requirements. But develop a discipline to think. And once you've mastered 10 minutes, and 10 minutes is not enough, bump it up to 15, 20, because a lot of the panic that I mentioned earlier sets in because you don't know what to do. And you're frantic because you haven't thought about it. And as I mentioned, the answers are within you, but you've crowded out the answer in favor of noise, nonsense, and nuisances. Okay, so that's my best advice for you. Develop the discipline to think about your business, to think about how you can grow it, to think about how you can improve on your relationships. Think about how you can improve upon your product. Think about how you can pivot. Think about how you can take advantage of opportunities. Think about how you can get out of that hole you dug for yourself. Think about who can help you do your taxes right, get good data in to get good data out. Think about the timeline it's going to take to work with Ariel. Think about what documents you need in order to be prepared to borrow. Think. The answers are there, but it's really a challenge in this noise-filled world to get at the answers that are actually going to make a difference for you in your life. I see the beautiful Dr. Anna has returned to the camera. That must mean our time is up.
Yeah.
And I appreciate all of you and all of the wisdom that you've shared today on this panel about, talking about growth. It's a great time to think about those things as we close up 2020 and embark on 2021. As I mentioned before, and Dr. Webb, you there in Christmas red, this is the season. Hope.
Tis the season, baby.
The season for hope, for the future. So I encourage you to think about that, be hopeful, be inspired, write down your vision, make it plain so that you can sail into 2021, with action, right? Because you've thought about it, you've let other people know, you've got your team assembled who can hold you accountable so that you can lay out your expectations, like Dr. Webb said, so that you can know whether or not you've hit your targets and why, right? So you can do more of this and less of that. And so thanks so much, Dr. Anna, for letting us be on today with your audience. We really appreciate it.
Thank you all. Now you guys can see why I say so many businesses in South Florida loves them some Althea, okay? The patience and her willingness to meet you where you are. I think that's my favorite part about you, Althea, is the fact that you have so much patience and you are in it for the long haul. And, I've heard you give that speech to so many small businesses that freak out because it's so much responsibility, so much weight, right? And it's really great to have your own village. One of the things we try to share with everyone we come across, every business, is the value of building a village. It is really important not to function in a silo when it comes to this, because yes, it's your business, but it's your baby. This is an emotional situation. And, a lot of times there's the task of feeling like I have to know how to do everything all the time. And it's okay to say, I don't know. I am happy, and we do these panels and I tell, people who join us, I have my notebook because there are things that I also don't know. And so it's just really important to learn from each other, to lean on our experts and understand that that is a strength. That is not a weakness. It is a strength for us to come together and to utilize what's available to us, because when you grow as a business, we grow as a community. And so we want that. We all want that. And so favor from a panelist. We didn't know which contact information would be best to share with the audience, right? So we wanted to be safe. So whatever is the best contact information, like if there is an email within Bank of America, that's the best place to book an appointment, to have that conversation. If you could put that in. Dr. Webb, if there is a specific process for a consultation with you, if you could put that in. And, Danielle, I already knew, so sorry. In the area, we also had yours up, but if there is like a website or a place that people should go to look you up, to learn more about what you have to offer, could you bless our participants and put some of this in the chat section for us? That would be amazing. And so, as promised, I give breaks. Coffee breaks. I give snack breaks, but do not go. You are hanging with us for the day. I'm in my t-shirt. This is a relaxing Friday. Hopefully you're watching, you're snacking, you're taking notes. We're going to give you guys about 10 minutes. Our next session, instead of starting at 12, we'll start at like 12:05, 12:10. We'll give you guys a bit of a break. And then you're going to hear our background coffee house music. We're going to pretend like we're outside. And then, you'll hear me come back and talk a little bit with the next workshop, which is on digital marketing, from someone I think you are going to love. I've seen her do these workshops. It is so informative. Alexis Fox is a really great talent to the community. And you are definitely going to want to have your notes ready. You're going to want to make sure you have your questions ready. And just FYI, the workshops are not made public, only like panel conversations. So if you miss it, you miss it, okay? So don't miss it. Take your coffee break. We'll be back in 10. We'll be back in about like 12:10. We want to give you guys some time to take a break, but I'll be back. We'll be back, and we will see you for the next session, which is digital marketing with Alexis Fox. Panelists, you are amazing. This was a phenomenal panel, and I feel like we literally covered everything. And so appreciate you all. Happy holidays. I hope you actually take a break. I hope you take a break. You eat all the things. You rest, because guess what? In 2021, we are going to need you.
We'll be here.
Thank you.
We'll be here. Thank you all so much. Danielle, Jeffrey, Dr. Webb, Ariel, y'all were great. I wrote down your email addresses too, although I already knew most of you, so thanks. Have a great weekend, everyone.
All right, guys, we'll see you
Thanks,
in
Anna.
we'll